Hi, good morning, everyone. Good morning, everyone. Just a moment, let me send out this link. Okay, we are starting very shortly. We are starting very shortly, guys. Yes, all right. Good morning, everyone. Good morning, everyone. I can see people joining. Yes, yes, yes. Good morning, everyone. Good afternoon, good evening, depending on where you are joining and connecting from. Please, guys, 1 minute. Let me power this laptop so it doesn't go off while we are on the session. Okay. Yeah. Yes, good morning, everyone. Please let me know where you are joining and connecting from. Let me recognize us in a special way. So we'll be heading straight to the chat to make some money. I'm super pumped up to make money with us today. So this week has been amazing for me and my private community. So it's been an amazing week. Yes, from Monday to yesterday, which was Tuesday, amazing and beautiful trade taken, and today is Wednesday. So let's see what we can do in the market. So let me know where you are joining and connecting from. Let me know so we can proceed into the charts. All right. Yeah, yeah. Okay. Yes, I can see the comment section already bubbling. Yes, guys. Okay, my people are here. Yeah, Caleb from Abuja. Yes, this is Pekes. Please, I'm calling the name I'm seeing here. If I'm not getting it right, please pardon me. From Ogun State. Yeah, Miracle from Ogun State. All right. All right, who again do we have here on the session? Yes, so let's get it rolling. Let's keep it coming. Let's keep it coming. Please drop some powerful affirmation in the comment section. Money must be made today. Money will be made today. Let's go and print. Type money must be made. Money must be made with some heavy and powerful fire emoji. Yes, 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 yes. Keep it coming. Keep it coming. Drop some powerful fire emoji on the comment section. Money must be made today. Money will be made today. Let's affirm together. Then we'll go into the chat with this energy. We'll go into the chat with this energy. Let's go into the chat with this energy and print some money. Money will be made today. Yes, good morning. Yeah, Mr. Tasty Money. I can see you, sir. Good to see you. Good morning. Good morning. Please drop some fire. I'm waiting for you guys. Drop some fire emoji in the comment section. Money will be made today. Money will be made today. So for some of us that have a form of connection with me personally, this week has been a very amazing week, like very good week on the charts. Some threads doing 1:10, 1:8, 1:4. So yes, 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 dollars must be made today. Yeah, yeah, yeah. Yeah, that's the spirit. Money has to be made. Money has to be made. So what I was saying is that this week has been an amazing trading week so far. Today is Wednesday, so we are hopeful again that money will be made again from the market. So tomorrow is Thursday, Friday is NFP. So for me, even if I don't trade again, what has been made from yesterday, Monday, is okay. But I have to show up here to lead us into good profits again today. So we'll be heading straight into the charts with this energy. I'm very hopeful that it's going to be a money day for us all here connected on the live trading session. So we'll be heading straight into the chart. I just want to check my FX book, sorry, Forest Factory calendar to know if we have a red folder news today being Wednesday, 5th of March. Okay, the one that we have here have already taken effect and there is no red folder. Okay, we have a USD red folder news by 3 p.m. Do I need to share my screen so that you guys can see this? Okay, let me just share. So I believe we already know how to use this platform to look at the news events happening for the day. So this is the one that we are expecting by 3 p.m. 1, 2 is for what p.m. again? 3 p.m. Yeah, 3 p.m., 3 p.m. Okay, 1:15 and 3 p.m. on USD. So, but then that's fine. The main thing is getting your technicals right and then just positioning in the market to print. So, most of the time, the news is there to help us make even more money from the markets or from the chart. So, I'll be going straight into the chart, but I have to leave these disclaimers. Yes, not because maybe you know me or you kind of trust my trading skill, it should not make you over leverage or risk your account too much. So just use the appropriate lot size that your account require. Don't use an outrageous lot size. Don't flip. If you are flipping, it's at your discretion and is at your own risk. So don't flip. We are hopeful that money is going to be made, but then we will always advocate for proper risk management. So it should not be that one trade will take your account away. So the account that you spend so much time building and maybe spending so much time in patience building and you can just mess it up with one trade is not ideal. So let's say you are trading your proper account and you are trading risking 1% of your account. So just use the normal risk management that your account require. So if you are risking 2%, just maintain. Don't over leverage your account. And it has happened in the past does not mean that okay, past results does not guarantee future results. So it's all about centered on proper risk management. So and another thing is if you have gotten to the threshold of your trade for the day, let's say your profit target or your loss limit you've gotten for the day. So you are not under any duress or compulsion to take the trade that I will call out. And another thing is if you feel the analysis it doesn't sit well with you, of course, nobody is the master of the market. So we all here, we are not claiming to be best analysts. What we just want to do is to make money. So I will analyze the market based on what I see in the market by my own perspective to the market. So, but then if it doesn't sit well with you, you can decide not to take the trade. well, good and fine. I can make money. Is my analysis, is my setup. So that's it. Let's go straight to the charts. Let's see what today is going to do for us. Right? Let's see what today is going to do for us. Let me share my screen. Let me share my screen. Mm, let me share my screen. Okay. I will share my screen very shortly. Okay. Right, sharp. Okay. This is my screen. Where do I start from? Okay, let me start from GDP USD, then do Euro JPY and gold. So as you can see on my watch list, these are the three pairs I focus on. So I can only open other pairs if there is need or someone just asks me, okay, look at this pair for me. What do you think? Or on a live trading session like this, I can just open it. But personally, I just focus and trade these three pairs. So this is it. GDP USD. Now, from 4 hours time frame perspective, so we can see that GDP USD is on the uptrend. Wow, where is this guy going to? Is on the uptrend, so non-negotiable. Looking at it already from, let me take out this. I will explain something around this when I get to this point. So looking at this, you can already see that this is a clear uptrend. And looking at where the market is, and you now ask yourself, where is the market likely headed? Which zone? Because market tends to move from one zone to the other. Market tends to move from zone to zone. So as it has broken this level, you can see that the market is going to this point, and there's no like any resistance level here that you are saying that the market is getting to, except this. So in our mind, the market is heading, making its way up to this point. So looking at 1 hour time frame, so this is the trade I took yesterday. Very beautiful trade of 1:4 arrow arrow. So the reason of the trade is simple. Let me just explain to us so we can as well learn. The reason of the trade is simple. First, you can see that we are on an uptrend. The trend alignment is up, and this is like a support and resistance level. I just use this line to denote it. It's supposed to be a zone. So I have seen that the markets have played around here, and it failed to keep going down, pushed up again, and this is a support and resistance level broken. Now, when you see this, you just pull out your fib, use the last low and the last high where the market is retracing from. So pulling out your Fibonacci retracement tool, doing this on a 1 hour time frame, yes, pulling out your Fibonacci retracement tool, you can pull it out. And for me, if this align, let me go to 5 minutes time frame so we can see clearly. So if I pull out my fib, let's say on a 1 hour time frame, and I come to 5 minutes time frame where I usually take my entry, I almost missed the trade. I entered impulsively because I've already analyzed it. I just saw it and it has come to my level and is already leaving. It wasn't a pending order. Normally, I should have used the pending order, but I didn't know why. I almost forgot the analysis. I did the analysis with my private community when the market was at just retracing. So I put a fib here, hoping that, okay, it's going to get down here. But if the markets didn't get to this point and keep going up, this fib would have been violated. Then we'll take the new retracement point is coming from. So the market's coming down, and this is like a support and resistance level. You can see this point, this point, this point, and is aligning to my 61.8 Fibonacci retracement tool. So for me, is an ID plus setup, is an A plus kind of setup for me. So when I see this, is a killer thread for me, is a killer thread for me. So if it has failed, on a scale of 1 to 10, just like 2, that it has failed for me. Oh, so is ideal that as a trader, when you do your analysis, you know how your model is. If it's playing out, you know that, man, this is the time to make money. So this is your strategy. So for me, once I have that trend alignment and a break and retest of a support and resistance level, and it aligns to 61.8, damn it, let's go there. We're gonna make money. So we took the trade and boom, money is being made. And where is the market now? I was actually expecting a sell from these points. I was actually expecting a sell, but then that did not happen and the market pushed up aggressively up. So what are we like going to do on this guy? So for now, on GDP USD, there is really nothing that we are going to do. See where the market is heading. If you put this back to 1 hour time frame to see if there is any zone or point that the market can come to before it starts retracing or start pushing down. Look at, guys, look at, there is nothing here. See, I believe you can see it. There is nothing here. There is no level here that you can say the market is going to get to. Now, let me just put this thing here. Let me mark out this level, this point. Let me use a red. This red is too sharp. Let me use a dull red. So, okay. So now, this point, this whole area, there is no place that the market is going to tap into. Then you say that is going to retrace, just like you have here, the market is retracing, or you have here, then this is the point here that the market is most likely going to head to. Now, because there is no level here, we can spot a turning point here in the market. Now, what I can expect from this market here is to give a little retracement if it gets here. Yeah, it's already doing that. It's already doing that. If it gets here, it will give a retracement. But because this is an uptrend, I'm more bullish bias and bullish perspective. So what the market can do is to just retrace a little here and keep pushing up. So if this alignment was supposed to be for a buy, there's nothing that will make me not enter for the position here. But this is like we are counter trending. So I usually do not do more of counter trend, because this could just be a retracement. And of course, in retracement, you can't say exactly where the market is retracing to unless you are using, let's say you are using a fib tool, then you can now begin to look at where the market is retracing to. But then on small retracement like this, you can't conclusively say where the market is if the market is going to do much of a retracement before going to push ahead. Let me even mount a fib tool here, but then using fib here, I don't know, but I don't trust it that much here. Let me see if it doesn't align to my support and resistance level. It doesn't align. So what I would just typically do is I would be more patient on this guy now. So if this thing happens, if the market retraces a little, pushes up, then this is like a minor level here. If it pushes up and does this, then we'll head up, continue for the buy. But for now, guys, just be patient for GDP USD. Just exercise more patience on this guy. You are going to see what it's going to do. Then it can give a trading opportunity. So just wait, relax. There's no action to take on GDP USD. Just relax. If the market retraces, breaks this level, at a breaking of it and a retest, then we can position for a buy, more buy, because this is like a minor support and resistance level. You can see how the market is rejecting on this area. And this rejection is normal because of what I've showed you on the left hand side. And if you reject, retrace a little, push up, break here, break and retest at this level, then be ready to enter for a buy. So we may not be on the session for it to happen, but I'm just explaining to us technically on the thought process around what you can possibly do on GDP USD. So if the market does that, then you just typically take action as the trader that you are. So all right. So that's that for GDP USD. That's that for GDP USD. Let me look at Euro JPY, one of the other pair that I trade. So I believe we are following. Please let me know if I'm making sense. Let me know if you are following. I can see 5 persons on this session now. I can see 5 persons on this session now. Let me know, guys. Let me know if you are following. 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 If you're following, let me know, let me know, let me know, let me know before I go ahead. Let me know that we are following. So let me know if we are following. So from there, I will go to the next pair on my list, which is Euro JPY. Then hopefully, if we find something on it, then we'll shoot. If we don't, then I can just look at gold. Then I'll ask you for pair of your suggested pair. Then we'll look at it and see what can possibly come out of there. All right. Let me continue the analysis. So Euro JPY, let's go there. Yeah, this guy has been like a good guy, sweet pair to trade. Just they do like touch and follow, which is what we want. So this is quite simple. Looking at it already. So one thing I like EJ, sorry, is that once it takes a direction, you can almost be certain that you are going to hit TP. If you're taking SL, you take SL straight up. If it's in your direction, you can almost be very certain that you are going to hit TP. So this is a trade that I took yesterday. Look at it. This is the TP here. This is the TP here. So, but then I was trying to short at this point, middle of the night, midnight, because I was seriously anticipating a sell, but then that didn't happen. Boom, SL. And it's though the market is still heading up, it doesn't want to start falling yet. But then let me do the analysis from top to down. So, on what we can typically see on Euro JPY, we are seeing the market is rallying aggressively to the upside. And this is the point that we are looking at the market to get to, then give us reason to act. So if this market comes to this point, let me move to 1 hour time frame. If this market comes to this point, then we can just observe what is going to happen at this level. Guys, you can mark this level on your screen, look at the number, look at the level, pay attention to it. If this market comes to this point, a rejection here, just wait for, let's say, 1 hour candle to close. If it rejects on 1 hour candle at the closure of 1 hour candle, giving you a signal that it's going to fall, then you a selling opportunity would have cooked up, then we'll enter for a sell. But at the moment, I can't give a pending order here because the market have not gotten to this point. And what we do as trader is just to speculate, then the market do whatever it wants to do. Now the market can come to this point and do as though this area does not exist, then it can break it, then you know that is the next target that is going to. So if this happen, I will typically wait for a retest of this. Then once a retest happen, then we are going to the upside. But then on the contrary, if the market gets to this point and retraces, then we can look for a selling opportunity. That sell I was anticipating here. So you see what the market did here, and I was seeing this as as a head and shoulder pattern. That gave me the confidence to say, okay, we are going to sell, enter the position. So it was like a head and shoulder pattern. Now, entered the trade, then boom, it didn't work, was stopped out. Now, when the market finally started going down, I marked these points. If for any reason the market broke through this level here, this minor point, break through it, and does something like this. If for any reason the market broke through, I just marked this. So the market couldn't break it. So I just knew that this guy is not ready to start falling. It's still going up. It's still going up. But I didn't want to pursue the market because I've already taken an essay. I didn't want to begin to do some impulsive decision. So if for any reason the market broke this level, what would have done is to wait for a retest, then match down. Nothing would stop it. Match down, nothing will stop it. But then it didn't happen. So the market is still going up. So now the level we are looking out for is this guy here, where the market is currently approaching towards this level. This level, I'm hopeful that a reaction would occur on this level. A reaction would occur on this level. You can see the accumulation that happened here. So a reaction is most likely to happen here. But then you can just sit on your system, or you can just wait for the market to, get to that point. Then if you reject, then we can almost be certain that it's going to fall to the downside. But then if that doesn't happen, we just know that the market is still going to rally up to this level. Let me put this bar here to this level. So let me check the distance from here to here. This is like, 90 pips plus 90 pips. So let's just see what happens on this guy. Let's see what happens here. So no action on this guy yet. But then if I get a signal that, okay, we are set to take action, I can send to the group chat. Just make sure that you belong to one of my group chat that I am. So that will be for Euro JPY. That will be for Euro JPY. Okay. Yes, following. That will be for Euro JPY. So let me do the analysis for, let me look at gold. Then I can now ask for a pair of consideration from us here. So just a moment, let me do the analysis for gold. So I'm going ahead to analyze the gold for, so we are like, the number is fluctuating 4 to 7 on YouTube. So I don't know how many is following on Facebook. I don't know how many people are following on Facebook. So let's see what we can do today to milk the market as we have always done. Let's go. So I'm going ahead to. All right, it's time to analyze gold. So are there some gold diggers in the house? Are there gold diggers in the house? Are there gold diggers in the house? Are there gold diggers in the house? Let's go there. Okay. So what is cooking on gold? What is happening on gold? Let me just clean these charts and okay. Starting out the analysis for gold, let me change this to my green. Okay, this level 2 as a swing point in the market, the high, and this is the low. So where are we looking at the market heading to or going to take an action or react often? Let's see. I'm seeing this guy. Um, Looking at this level, let me first put a mark on it. Okay, this, yes. Okay, so if you stretch this, we can see how the market is playing around here. So now, what the market can possibly do is, as the market is gently approaching this point, we can see this, then come back to this level, do a kind of double top, then begin to rally down. But then if the market does not reject here, we can see that the market would most likely rally up to this height. So that's what we'll just look out for. Let's see on 15 minutes time frame. Let me mark out this zone on H1, see what the market does here. See what the market does here. Okay. All right. 15 minutes. 5 minutes. Wow. So the market is already selling, but then we can't jump in for a sell at the moment. This is like almost 70 pips here. The markets have made movements in a sell direction. So let's just look out for what the market is going to do the more on this guy. Now, because you can't enter for a sell at the moment, let's mark out this point the markets have been respecting. So if the market gets to this point, chances are high that we'll have this retrace to this thing, to this level. This will be like a third touch, then shoot up again, shoot up again. So this is what I'll be looking out for on gold. This is what I will be looking out for on gold. Why I can't say that we are going to enter for a sell position here, because the markets have already moved is moving already. So if you see clearly, this movement is already like yes, almost 70 pips. So you won't be considering to enter for this trade because like typically where are you now going to put your SL, and where what exactly are you going to be targeting in terms of risk to reward ratio. So let's just be patient, let this market come down to this point. I'm a kind of looking out for the market to react on this point, then we can buy. But then if the market for any reason does not react on this point and sell and break this level, at a test of it, will aggressively go in for a sell position, seeing that there is a lot of space on the downside that the market has to come back to fill, But then let's just be looking out for the market to first of all get to this point, then we can possibly look for an action, or we can possibly find a reason to take action when the market gets to this point. So just pay attention to your charts on gold. Let's have this happen first, then we can go ahead to take action, right? I believe that's clear enough. So for me, the pairs that I trade, I'm not seeing any setup. So I basically trade these three pairs. Yes. Yeah, yes, only these three that I trade, my brother. Only these three. Only these three trade that I take, that I trade. Only these three. Gold, GU, and Euro JPY. So if for any reason I don't find any setup on them, I'm done. I'm out. I'll go and do other things with my time. So, but then that's like the journey of a trader. At some point, you may be trading everything you find in the market. At some point, as you keep growing, as you keep maturing as a trader, there comes a time you can just begin to. So I'm going ahead to. You can just begin to narrow down or focus on a few pairs. A few pairs. You can just begin to focus more on few pairs. So this is like the typical journey of a trader. So we are like how many here? Five on this session on YouTube. I don't know how many people that are connected to us on Facebook, because we are streaming both live on YouTube and Facebook. So I'm just going to take out some time to answer the questions that you guys would have on this session before we go ahead to look for another pair to analyze based on your suggestion. Like the typical journey of a trader. So let's go. I don't know if anyone has any question or whatever. I'm done with the three pairs that I trade. So there's no setup on it. We are just I've explained to you my perspective to the market, and I believe that if you've been following, you can take an action if the market gets to that point, even without me being there, right? Even without me being there. So let me know if there is any question for me, or then you can suggest a pair that you would want me to look at. Maybe one or two pairs, then that's it. Making money from the market is not by the plenty number of pairs to trade. There are people that are killing in the market just with one pair. So look at the trade that I shared with you guys. I showed you guys on Euro JPY. So if I'm using a very good lot size, let's say on a very good account, I like as I said earlier, I'm done already for the week. So imagine doing 1:10 two times, 1:8 once on one pair, and on another pair 1:4. Then even if you have a proper account that you are trading for that week, tell me you've passed both phase one and phase two. Even if you are using a 1% risk per trade, you've cleared both phase one and phase two. So you don't really need a lot of pairs to make money from the market. So if you are just starting out from the on the market, you can just stay on, just check the pairs that you feel that is in line with your model that you understand in the market, or what you understand in the market. Try it on them. If it seems it's playing out, you can just focus on maybe two to three, maximum four, five. Then I believe you will be fine. Instead of having the 28 currency pairs on your watch list, and you will be everywhere, and you may even be nowhere. Imagine scattering your focus and attention on everything that is happening in the market. So if you have the time, well, good and fine. But for me, it's not really ideal. I'm not saying it as a, how do they say it? A financial advice. It's not like a financial advice. If it's working for you, well, good and fine. Just stick with that. So there are a lot of things that people can do in the market, and it does work for them. So if you know the one that works best for you, based on your model you trade, the way you understand the market, you just stick to it. Whatever that is working for you, just stick to it. That's what I'm saying typically. Now we have people doing some amazing results in the market, and you see some folks on the internet shouting, is it demo or life? They like, in their mind, they don't believe that people actually come here to make money. People are dragging a $1,000 account to a good amount, 100K. It's possible. People are taking $10 account to 500. Maybe very soon I will even declare it. I will just fund five $10 accounts, use it, and show you the guys that is possible. Oh, it's possible. So this is the market of many possibilities. So just stick to what you feel that goes well for you. I believe you'll be fine. So guys, drop pair suggestion for me. Let me look at one more pair or two pairs before we call it a day. So we have to be comfortable to come to the market and analyze the market, and we don't see any setup at the point, then we should just be comfortable with it. You don't have to force any trade. Just allow the market to come to you, then you pull out your trigger and shoot. Not because you've analyzed the pair that you say that, you see, I must trade today. If you come to the market with the mentality that I must open up position today, it can be very dangerous on your accounts. Reason being that you will end up taking some irrational trade that, if they ask you what exactly made you enter this trade, you can't conclusively give any technical reason why you enter the trade. But because your mind is already playing on you that you must take a trade today, so then your mind or your eyes will start seeing what is not in the market, and your mind now starts interpreting it wrongly, making you to take irrational decisions. So when you analyze the market and you see that the market hasn't come to your point, so it's best, and the ideal thing is just for you to wait. The market rewards those that are patient. The market rewards those that are patient. So when you are patient, when the market comes to you, yes, you can now relax and open your trigger and fire and fire. So it doesn't take much to make money from the market. You just take both a patient and strategic action at the right time. You understand that the market is action in the market is based on timing. Action in the market is based on timing. So the action that you're supposed to take, let's say in 3 hours time, you take it now. It can backfire on you. And the action that you're supposed to take now, you are waiting for 3 hours time to take it. It may not do you good. So just know the right time to do whatever you have to do in the market. So I can see someone dropping GJ Okedimma Kingsway dropping GJ. Well, okay, let me look at GJ. Okay, since you have dropped it. Now GJ also move almost the same with Euro JPY. I used to be a good fan of GJ, but at some point Okay. So you said I should analyze and drop my setup for you. Do we share any group chat? Let me know the group chat we share. Let me know the group chat we share so I can know where to. I don't really thread GJ again. I used to be a good fan of GJ, but GJ is more sporadic, and to me, based on what I've seen, both back tests and experience, Hero JPY works better for me. So I just replaced EJ for GJ. So, but GDP US and GDP JPY and Euro JPY the same pattern in the market. So, if you've been here, you saw my chart on Euro JPY. I can almost tell you for a fact that GJ is still going to look like that. Though I've not opened GJ for a while. Let's see. Let's see. Let me share my screen. Search GJ. GBP JPY. Wow. Let me start with 4 hours time frame. So you can see that long buy that happened on Euro JPY. This is it here for GJ. Now let's say, let me take off this guy, take this guy out. Okay. See the point of consideration. Let me mark out this from 1 hour time frame perspective. Let's see. Now, all right. So see what I'm technically expecting from these guys, as I've already highlighted it in Euro JPY, that because we are on an uptrend, I won't be considering shorting at this point because I see a resistance here. Yeah, I won't be shorting because the market most likely can break it to target this point, to target this high, because this high seems stronger to target this point. But then what we can likely see on this guy is a retracement. If you retrace, then it will go up, keep buying. Point, let me put a zone. Just know where this green line is coming from. This green line, this is it here. This green line here. So this is like line for support and resistance level. So this is it, and the market is already at that place almost. Now see what I'm looking at for the market to do here. This is a typical retracement. This is a typical retracement. Let me block this area. Now we'll look at the market from these perspectives. So we are looking at the market introspectively. What I mean is whatever happens, then you can switch your bias. Now, if this level, I believe you guys know where we got or how we came about this level. Now, what I'm looking out for on this pair is two things can likely happen. The market is retracing, will do this, go up, keep falling, and come to this point, and then take off for a buy. Scenario two is as it's retracing, this is retracement, then it's going up and break this. Once this level is broken, once this level is broken, then you can be sure that the market will retrace, and then you enter for a buy. The buy is going to take the market up to this next high, this next level here. Now let me check the distance. This is like 95 pips. So even if you are using 30 pips SL on GJ, you're gonna make like 1:3, which is very ideal, in the market. But there is no action for me on this guy here. There is no action that I would say let's take here. There is no action. So another thing I'm looking out for, let the market just get to this point, this or this, then I'm willing to look out for possible action. I don't want to keep my money hanging. So because you can enter for a buy, then the market is coming down to this point. You can enter for a sell, the market is coming to this point. So let the market take its full course. Then if the market comes to a vantage point, then we can have an action to take. You see, this is like minor support and resistance level. See this point, this. First, you can say this is first touch, second touch, third touch. And if the market gets to this point, which is like going to be like its fourth touch, yes, then we can buy. Or if the market comes to this point, and pay attention to what happens at this area. This is 5 minutes time frame. On 5 minutes time frame, guys, this time frame is very powerful for entry decision. If the market keeps coming down without any form of low volatility, without any form of low pressure for the sell, and it keeps going down aggressively, if it breaks here, then be sure that what we can expect on GJ would be this, would be this. What we can expect on GJ would be this, to the downside, to the downside. Look at it, to the downside, to the downside. But until then, just be open to what the market is going to do for you. Just be open to what the market is going to do. Like I've said, no action here. The market is either is going up, then, or it's coming down. At this point, just wait, let the market, complete whatever it wants to do. Then you can go ahead to take action. If the market comes to this point and rejects, then at this level on a 5 minutes time frame and it give you a bullish engulfing, bullish, you know what, when you see bullish engulfing, you know it. Once it gives you bullish engulfing, just know that we are in for a buy at this level. But you have to be patient to wait for the market to come to this point. You have to be patient. You have to be patient. So this is it for GJ. This is it for GJ. So just be patient, guys. So that's trading. You not because you just analyze the market, you command the market to that you are going to enter. All right, Chibuoke from Enugu, I see you. So the person that dropped GJ, I don't know, does it make sense to you? Let me know. If it does make sense to you, tell me. If it does not, feel free to type it on the comment section. Let everyone see it. That it doesn't make sense. My analysis doesn't make sense to you, but I'm sure it does. But let me know. Let me know. I would like to get your feedback on it. Let me know. So, four trades, four pairs have been analyzed. Let me check my Euro JPY and see what's going on there. Okay. Let me share something. Let me share with us. So, see now, I can almost be certain that this guy is going to break. This is not a bullish, a bearish engulfing that you will say, okay, oh, we are in for a sell. So if this candle was way longer than this blue candle, then it signify a selling opportunity coming for you. But then the market is still here. So let's just wait. If it breaks this retest, then we are in for a more buy. Someone said cat JPY. Let me look at it. quickly. This is the last pair that I will look at. I don't trade these guys. I think someone suggested this pair during our Tuesday analysis. Was it this guy? Okay. Now let's say this is it. This is it. So you can see why and how I marked these levels. So this is level that I'm expecting the market to come to, then react off on. So first point, this you can see this is like break and retest, break it, retest, but then the market didn't go down. Now, interesting stuff happening here. Now, we see this point, this break and retest. Let me draw it well. So guys, if I get any accurate signal here, even if it's not a pair I trade, I'm going to take it. I'm going to take it because I did the analysis. I'm not just coming here to give you guys analysis and without trading it. All right, so I just came here to really modify the point because the week two also is very important. So now see what happened here. It wasn't like an actual break and retest, but then let's say this level. No, I want to pick the best point. Okay, let me just use no. Instead of having to go down the far to begin to draw this. So see what the market did. This, and boom, this high was taken out. So when you see this, you can be sure that the market is going to start buying. The market is going to start buying because if the market was heading down to this point, what could have happened is this. Then we'll come to this point, which is like the last low that we could see in the market. Then the market may just start buying from here. But then that did not happen. So for us to see this push to the downside, then aggressive buy, taking out this high. So for SMC traders, they call this break of structure. Yes. So now this signifies that at a retracement of this, we are going to enter for a buy. And what I'm seeing here is the market is going to retrace. Let's use Fib 2 here. So this is the time to pull out your Fibonacci retracement tool. Powerful stuff. Powerful stuff. Now, I'm seeing a very amazing trade here, guys. Whoever dropped this pair, nice one. Now, if the market doesn't keep going up, now, if the market does this and doesn't keep going up, then this Fibonacci retracement tool holds. Then let's say the market comes to this point. This is like an ID A plus kind of setup for me. If the market ever comes back to this point, I'm longing this guy. I'm longing it. This is break and retest of support and resistance level. Aggressive break, return to it, and it aligns to a key level. And the key level aligns to 61.8. Man, the confluence is high. So on a 5 minutes time frame, where I typically come to take my trade position, I can just put a pending order here. I'm going to put a pending order. So, but then if the market keeps going up, that means that this whole thing has been violated. So just take a screenshot of this. Guys, take a screenshot of this. I'm very optimistic that this guy is going to play out. So whoever dropped this, nice one. So take a screenshot of this. At a bounce on 61.8, then we'll enter for a buy. It's not my pair, but I'm going to leave it here. I'm going to leave it here. Let me do see what 20 pips SL look like. Wow. Why is it looking like it's too tiny? Let me even check the distance from here to here. 77 pips. Let me do 30 pips. Okay. So this is the setup. So we another thing we won't say exactly when it's going to get to this point, but then just look out for it. Let me add JPY here. Let me see what happens. So guys, just pay attention to it. You can take a screenshot of this. Next week you're gonna tell me what happens here. So take a screenshot. Let me put it on 1 hour so your screen can be clear. I don't want to give a pending order here, but then it's pending order worthy. It's very pending order worthy. 73 pips. Hmm. 73 pips. From where the market is to where we are looking at to take a buy position is 73 pips. 70. Then we'll just target this high here. Target this high. Target this high. Okay, if I'm going to give you guys pending order, let me increase the yeah. Okay, this guy also moves to 40 pips SL, targeting this point. This is 1:4 plus. So very good stuff, very good stuff, very good stuff, very good stuff. So you can screenshot, you can take the trade, you can look out for it. This is the point for 61.8. You can see it. Let me see what is happening on the comment section. Mm, mm. Okay, so someone is asking what time frame do I use for my analysis and what time frame do I use for my entry. So you can see that I started the analysis from 4 hours time frame, doing a top down analysis from 4 hours time frame, went down to 1 hour time frame. This is the point I saw this. So 4 hours time frame to mark this level, area of the levels of interest, this level here, this level here. If you shrink, zoom out, then you're gonna see it. This was done on 4 hours time frame. This level here spotted, here spotted, here spotted, 4 hours time frame. Then 1 hour time frame is just to look around this whole area, seeing what happened here. Market did not keep going down and broke this level aggressively. Then we'll now put a Fibonacci retracement tool here on this 1 hour time frame, waiting for it. So on a 5 minutes time frame where we usually take an entry. So that's what I was considering whether to give a pending order or not to, because on 5 minutes time frame where I usually take my entry, I would observe what is happening on this guy. But this setup is good. Like, I've been by my experience on how I've been using my fib tool. This setup is kind of is spending other word. Is pending order word 40 pips SL. But if you don't want to do pending order, is more like an aggressive entry. Let's say you are not on your system at the time the market would happen, you can use a pending order. But if you're on your system, you can decide to wait for the market to come to it, then observe the reaction of the market around that area. Then you can now take your trade. But if you're not available, you can decide to use a pending order. So, but then the setup is pending order worthy. 73 pips from where the market is to where we are speculating to enter is even 81 pips. So that's why I'm just kind of still looking at it, because if the market goes up, that means that this Fibonacci 2 here I put here have been violated. So the setup is now invalidated. But if it does not go up and keep gliding down, this guy is going to peak here. So that's it. I believe this makes sense to you. So just you can take a screenshot of this. You can take a screenshot. The coordinates are here. You can take a screenshot. You see you can open your chart, put your fib at exactly how I did mine. Your pending order, your fib to 61.8 is where I consider as the entry. Don't use 50, use 61.8. 61.8, then with your SL, then I believe you are going to be fine. Okay, so I believe I answered your question. I believe I did justice to your question. So you can have that as a trade, as a trade. So just look out for it and take the trade when the market gets to that point. So that's like a very good trade idea for every one of you. So we've done 1 hour. Any question before we call it a day? Any question? Do you have any question for me or whatsoever? Do you need any advice from me or whatever you need me to maybe address for you? So any in 3 minutes time. Okay. Okay, so you are saying yes, sir. I don't know what the yes, sir is. Does it make sense to you? Okay, I asked if I answered your question. Right. All right. So if anyone has any question for me, you can go ahead to ask. Please, if you're on this session and you've not subscribed to this YouTube channel, I ask you, please do it like right now. Do it like right now. We'll keep doing this and keep showing up every Wednesday. And I believe that we are going to be making more money from this session. Please do well to subscribe to this YouTube channel. Do well to subscribe to this YouTube channel and also do well to follow me on Instagram. Yes, that reminds me. Let me even make this announcement here. Tomorrow, 8 p.m. Nigerian time, I will be doing an Instagram live session with a very great woman in the area of finance. Her name is Financial Jennifer. You can check her out on Instagram and on YouTube. She's doing amazing stuff in the area of finance. So we'll be looking at the subject matter of securing, how to make, keep, and multiply the money. So, guys, look out for the session tomorrow, 8 p.m. Nigerian time. Psychology, psychology of trading, how to approach it. Okay, I will speak briefly on it before we go. So the session is tomorrow, 8 p.m. Nigerian time. Do well to check out my IG at the Akahuwa one. So follow me on Instagram. Tomorrow we're gonna be live together, and I believe it's going to be a very insightful session tomorrow, come Thursday, 8 p.m. Nigerian time. So psychology of trading, how to approach it. So um, how to approach psychology of trading is simple. Why I say it's simple? Based, I don't know the level you are and the area of trading psychology that is affecting you. Is it fear? Is it greed? Is it a fear of missing out? Or is it having excessive hope in the market? So these are different psychologies that can affect the performance or the outcome of of a trader's decision in the markets. Like these are different um, trading psychology thing that can affect a trader: fear, greed, hope, and yes. So I don't know the exact one that is the problem, or the one that is affecting you the most? So is it fear? Is it greed? That is it. So for you to attend to it, so the best approach for it, let's say in your trading, first of all, when you do proper risk management, it has a way of keeping your psychology in check. You know, if you are trading your account, okay, he's saying is fear. All right, so let me just narrow it down to fear. So let's say fear of blowing your account. First of all, scared money makes no money in the market. If you cannot hold the red, you cannot see the blue. Let it sink in. If you cannot hold the red, you cannot see the blue. So first of all, apply proper risk management. If you apply proper risk management, then don't do ta 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 ta. Just open one position. Then, so far as you've calculated your risk, you know how much you are risking. Go and sleep. Leave the trade to play out, whether SL or TP. You'll be fine. Is when you are over leveraging your account, that's when fear would begin to set in. That's when fear will begin to set in. Yes, I know it comes with a level of maturity in the market, but you can start with this. Do proper risk management. Take your trade and leave it. Let the trade play out. And another thing is, don't use secret money to trade. Let me see what's going on. Gold, does gold have any best trading session? Yes, London session can be it. No, not really. Gold, even midnight Nigerian time, gold is still moving. Let me finish this question that I'm attending to. So don't use a sacred money to trade, because if you use, let's say you are a student and you use your school fees or you use your house rent to trade, maybe you are working, you use your house rent. First of all, you've already put yourself in an uncomfortable situation with the market, because all your idea is that you cannot lose this money. You cannot lose this money. And when that is the case for you, first of all, where the fear would be around it is that you will see a setup that you should enter. You will be afraid, you will be too afraid to enter the market because you don't want to lose the money, right? That's why I said if you cannot hold the red, you cannot see the blue. So just do your proper risk management. And when you are trading, yeah, I've said already, don't trade with sacred money, because the thing that happens with it is that when you trade with this kind of fund that you are too scared to lose, if you enter a trade and eventually it hits SL, you will be too like you will be very, you'll be pursuing the market to make it back. And when you are pursuing the market to make your money back, that's when the market will deal with you mercilessly. That's when the market will deal with you mercilessly. So first of all, please apply proper risk management. Second, do not trade with sacred money. So with that, I believe fear is taken out. Fear is taken out. So you do your analysis, do your proper risk management, take your trade, you'll be fine. Over time, you'll be fine. So I believe this answers your question and this will help you very well. So for the person asking, does gold trade in, what's the best session to trade gold? Well, London session is great to trade gold, and US and New York session. So those two sessions, gold trades well. Those two sessions. So you can start with those two sessions, London session and New York session. So that's that. So this is the place we'll be ending the session for today. I believe you got some value. If you got some form of value, please let me know in the comment section. Let me know in the comment section if you got some value. If you got some value, let me know in the comment section. We've been here for like 1 hour, 15 minutes. Let me know in the comment section. Do well to follow this. Do well to subscribe to this channel. Do well to follow this channel. Follow my Instagram live. Don't forget, tomorrow we'll be doing something on Instagram, 8 p.m. Nigerian time. So it's going to be a very insightful one. Thank you, everyone. Cheers, everyone. Look out for your thread. The thread that was analyzed, look out for it. I believe it's going to print for you. It's going to print for us all because I'm going to take the trade too. So, cheers, everyone. Till we meet again, keep enjoying and keep making money from the forex markets.